Welcome back for another top-notch video. This week, guys, we'll be talking about the week of 19 October through 23 October. As always, the TSP top-notch channel is about your guys' TSP, the Thrift Savings Plan, Roth IRA, brokerage accounts. We go over all of these things. For those in the Thrift Savings Plan, we talk about the C, S, I, and F fund. For those in Roth IRA and brokerage accounts, we talk about the ETFs, IVV, VXF, EFA, and AGG. As always, these funds equal each other, and this fund up here for TSP slash Roth IRA brokerage people is the S&P 500. This one here is small caps. This one here is international funds, and this one here is bonds. If you have any questions, please write them in the comments below. Let's get right into our video where we do a basic general overview, and then we go into some technical analysis. The first thing we want to talk about on the top-notch channel is we are up 13.16% for the year. We are beating all markets. We are beating the S&P 500, doing extremely well with our TSP account on top of all markets. Very happy with our returns. 13.1% for the year. As you can see when I pull these up for the year for our funds right here, as you can see for all of our funds, the top fund we have is at 10%. So Top Notch Channel is beating that by a little bit. We're at 13%. We're doing very well for the year. For our C, S, and I funds, as you can see, we are up for the C fund, up for the S fund. The S fund is the best performing fund. Top Notch is above that fund. And then we have our other funds. The I fund is still negative here, as you can see, for the year, which is no good for EFA. And then, as you can see, these other funds are up for the year. For the week, though, we did have a down week. As you can see, change for the week here. We did have a down week for the most part with the F, C, and S funds. I fund was up a little bit, but that was basically snapping a 3-week winning streak. What do the charts look for the week? As you can see here, here's our charts for the C, S, I, and F funds, all right here. As you can see, they started the week off in the negative. Our basically C and S funds are way down for most of the week, and then they started to come back towards the end of that week. We did jump into equities on the Top Notch channel, so that was a real good thing. Towards the end of the week, and we made it a positive week for us. For some general market commentary, we talked. Tom looks over some of these charts. I highly encourage you to look at TSP Talk on the internet if you are interested in that. We're just going to look at some of these things that we saw in charts for this week. One thing that he noticed and that he put in here was this, basically this chart pattern we see with a head and shoulder. So he's saying this is kind of a left shoulder here, a head, and then a right shoulder. And very interesting to me. I tend to kind of look at this. It's not really clean to me, so they might see that. But another thing I like to look at it as is more of a cup and handle type formation. With this cup and handle formation, here you can see the cup in here, and here's the handle. And typically when you have a cup and handle formation, we see it jump back up here. And we also see that with a neckline as well. Tend to see it jump up there. So from a technical analysis, this looks like a pretty good buy-in point for stocks moving forward right before the election. As you can see here, here's his head and neckline, inverse head and shoulders pattern. As you can see, left shoulder, head, right shoulder, and then this, what we see, this bounce off of that. That's kind of what he's trying to emphasize on there. Left, head, right, and then a bounce there going forward. That's for the S&P 500 or the C Fund IVV. For VXF, what do we see? VXF has this bull flag going on right here, so that's kind of good. Another kind of cup and large handle formation. Very positive for stocks. We'll have to see where this goes from here, but I would expect good things based off the technical analysis here and charts, the chart analysis. We'll go into technical analysis in just a minute. For EFA, or international funds, the I fund, very staggered in here. Don't really like this pattern. It broke through here a little bit ago. We are above the 50-day moving average, but not really a fan of where we are at with this fund. And then finally, the last thing we have is bonds. Bonds did finally break down. Bonds have been just moving and chugging along ever so slightly for the longest time. We finally saw it break. It broke below its 50-day moving average back here at the beginning of September, October timeframe. We did not get invested in that for that reason. And then we saw it break down even farther from those funds. We're now in a descending trend line with this on charts. We'll look at it in a technical analysis in just a moment. Moving forward, let's go into IVV or the C fund for a technical analysis. Where do we sit? As you can see, we have these long trend lines drawn in here since April. The charts are above all the moving averages here. As you can see, doing very well here. Like I said, that we got that cup and handle formation, hoping to see that rise in the future. What do we see on our charts for IVV? We look at two things. We look at a long-term chart and short-term chart. There's three indicators we like to look at. Those three indicators are the PPO line, so that is the blue and red line. Typically when the blue line crosses the red line, price, which is up here, tends to move upward or positive. As you see, we had a cross here and price went up. When the blue line crosses the red line, we tend to see a decrease in price like we do here. Saw a decrease here at the beginning of October time frame, and price decrease. A better example of that is in the past, back in March. As you can see, PPO, blue line above red, crossed, big decrease in price. The other indicator we like to look at is the derivative oscillator. The derivative oscillator is basically these green and red bars behind the charts. When green bars are going up, price tends to go up. When green bars are going down, price tends to go down. And into the red bars, when we're going down into red bars, a lot of negative price action. When we're going up out of the red bars, positive price action. I like to look at this as kind of like mountaintops. We're down below earth, going above, up the mountaintop, price is moving up, and that's how I like to look at it. The third indicator we like to look at is Bollinger Bands. Typically when price is in the Bollinger Bands, that's a good thing. When it's outside the Bollinger Bands, it tends to move back into the Bollinger Bands, whether that's negative or positive. If you guys have questions about how we track our indicators and make our decisions, please let us know in the comments below on the Top Notch channel. Let's dig right into this week's weekly analysis. So this is the long-term chart for IVV. What do we see on the chart? As you can see, the PPO line is crossing again for IVV on the long-term chart. That's a very positive sign here. Our derivative oscillator went from the negative 1.4 to a negative 0.8 to now a negative 0.3. So that is headed in the right direction. Price is headed in the right direction. This is a good time to buy in. It looks like just before this election based off our technical analysis. On a short-term chart for IVV, what do we see? As you can see here for the whole, for October, we kind of had a fake out here and it rose. We had a really good couple weeks here, and then towards the middle of the month, our derivative oscillator started to drop off. Price started to drop off. PPO line crossed. We're not going to get involved in that for a while. I wanted to see where this was going to go. And then our derivative oscillator started to pick up just on Thursday and Friday of this last week, which was a good sign. PPO line is getting very close here. Price is starting to react and move in a positive direction, so we decided to buy into that. So that's kind of our reasoning behind that. But that is IVV or the C Fund. That is the S&P 500. Let's move on to small caps. Small caps are VXF, ETF, or the S Fund. What do we see for this chart? As you can see, long trend lines drawn in here, doing very well, staying between those trend lines. We have this line drawn in here. This is kind of the February high. We are above that right now, seeing kind of not really as good a cup and handle formation, but we do kind of see that a little bit here. There's kind of like a little one here, and then, but overall kind of a big kind of dip and then up, and then we'll hopefully see this rise, get above this trend line here. We are above all our moving averages, which is a very positive sign. A lot of support behind this chart moving forward. Let's move into our technical analysis for VXF or the small caps. Long-term charts. We look at the same exact indicators. PPO line is above our red line here. Positive for price. That is very good. Our derivative oscillator is moving in the right direction. We're at 0.9, and now we're at 0.19 or 1.7 here. Very positive on long-term charts for VXF. Both our signs are up. That's a good time to get invested in this chart. As you can see here, price is moving in the right direction. We are within our Bollinger Bands. Short-term charts, VXF, S Fund. Where do we sit? Small caps. As you can see here, for a long part, for most of the month of October, our derivative oscillator was moving down, and price was not reacting to that, which is kind of surprising. We were staying out of funds. We saw this PPO line get closer. We really didn't see the drop in price until the PPO line crossed, which was right around the middle of the month. Once that happened, we kind of waited to see when this derivative oscillator would pick back up again. We saw that right around the 22nd, 23rd of the month. Just this week started to pick back up. Got back invested. Bollinger Bands are kind of tight here, so that is interesting. We'll have to wait and see where that is. But price is right smack dab in the middle of that. Doing very well there. Our derivative oscillator is moving up, which is positive. Our PPO line looks like it's about to cross, which is also positive. Good time to get involved in VXF. Let's move on to EFA. with EFA. This is International Markets, or the I Fund for Thrift Savings Plan investors. This is just not the greatest fund to be invested in right now. I know I tend to not like EFA for the most part, but look at this price action ever since basically August, guys. It's been just right on this line here. It hasn't moved very far at all. It stayed right on there. Not a really good place to have your money invested or make money for EFA at the time being. Let's look at it for a technical analysis. EFA, where do we sit? Long-term charts. Look at the exact same indicators showing a very similar thing here. Look how close this PPO line is on the red line, on our moving average line. They are almost running together like that. Very, very close. Don't know if it's going to go up and down. Our derivative oscillator has been flat for months now, or for almost a month. Not a lot of movement at all. Not moving in the right direction either. And I'm getting kind of concerned. These Bollinger Bands, look how close these Bollinger Bands are coming close together. We're probably going to see a big price movement soon, but we don't know if that's going to be up or down. And when we don't know, we don't want to be invested. That's long-term charts for EFA or the I Fund for Thrift Savings Plan. Short-term charts, where do we look? As you can see, EFA is doing better here. We had a fake out with our derivative oscillator, these bars down here. Price did react negatively when those bars started to go down, but now bars are heading back up. Price is starting to react positively to that, and our PPO line's about to cross our moving average. Might be a good short-term buy, but we're looking for long-term buys, so we're going to skip this chart. We're not really interested in investing in international markets for the time being. Last of all, let's look at AGG. This is our bond fund. This is our kind of safe haven when stocks are not doing well. AGG, or the F Fund for TSP investors. Where do we sit? Where do we look? Guys, not good. Our trend lines are basically, our moving averages are moving downward. Look at that. Our lines that we had back in March, the highs that we had, we're not anywhere close to that. We have a lot of resistance up here. These lines are moving back down to the 200-day moving average. This 200-day moving average is sloped up in the right direction, but how long can it last? I think this chart's going to come and bounce down off the 200-day moving average, which will not be a positive direction for AGG. Also, like I said, I'm just not really interested in this chart. Let's look at it from a technical analysis for AGG, ETF, bonds, or F Fund for TSP investors. Ooh, look at this, guys. We're starting to come out on long-term charts for the derivative oscillator, and then look at this. We moved from a negative 3.5 to a negative 3.6. That is negative. That's not in the right direction. That's not where we want to be going. Look at this price going down ever since the beginning of September. Down, down, down. Bollinger Band's very close. That's getting dangerous. And usually we see a big move when they get very close, and we don't want that in a negative direction. PPO line way below the red line there. Negative signs. Not a time to be invested in AGG. Guys, that is all of our charts for this week. Really appreciate you watching. That is the Top Notch channel. Please like, subscribe, or share. Really appreciate you guys. And here's where we're invested for the rest of the month. We're in 50% of the C Fund, or IVV, and 50% in the S Fund, or VXF. That is our stock funds. That's where we feel comfortable right now moving into this election. We'll see what happens. We'll see if it's a good move or not. Again, Top Notch is on top for the year. We are beating the S&P 500 and all other funds at 13.1% return for the year. That's another video. We'll see you guys next time.